Sonoda is the company you founded.
That's right.
And you come under high recommendation from Jeff Booth. And when Jeff Booth gets in touch and says, Pete, you need to take a look at something, like I'm all ears. Okay, I
Wonderful.
love Jeff. So tell us about Sonoda.
Okay, so Sonoda, basically, we exist to create an energy abundant future. And how we're getting there is actually solving the problems that we've been talking about around markets. And it's basically providing the energy industry the opportunity to decentralize the settlement process. And so when I say settlements, what I'm really talking about is the financial part of every energy transaction. So when you and me consume energy in our home, there's two parts to this transaction. One is I have energy delivered to me. Mm-hmm. The second part of that transaction is I actually pay for the energy. Now, what happens today is that the means for paying for energy are really kind of stuck in the days of the 50s and 60s when energy companies used to be vertically integrated. So when people used to walk neighborhoods, read the meters, go back to the office, put the information into the billing system, you get the bill, 30 days later, you're paying that bill. That's hardly changed in 50 years. We're still largely doing that. So we're paying for something that we've consumed 1 month ago, 2 months ago. So what we exist to do is to really cut all of that out. And so we're creating a programmatic link between the energy system itself and the Lightning Network. So you can imagine, the visual I like to paint is if you go into the control room of any utility, what you're going to see is all the physical nodes of the energy system sort of on the big board. You're going to have the points of energy production, the points of consumption, and all of the sort of nodes, the substations, et cetera, in between. They're all represented there. So now imagine the Lightning Network being very similar to the energy system itself and how it moves money, where every physical node now has its own node in the Lightning Network. And when energy moves in one direction, money moves in the other. So you're basically, what we're creating is a system where money can move as fast as energy. So no longer do we have to wait on the bill to come or anything like that. Now we can have really this full dynamic system that's perfectly linked together.
Right, you're going to have to break that down a bit more.
Yeah.
Okay. So talk to me as like a real world use case. Mm-hmm. Yeah. We're in my house now. Say this is not my house, but say this is my house now. I've got a meter up on the wall. I can turn my electricity or my gas on as and when I need it. I can put my cooker on, start cooking some beans for my beans on toast.
That's right.
I can boil a kettle, or I can have like the TV on. How does this work? Because at the moment, what happens is, like you say, I get a bill. I didn't even know that's a month or 2 months later. Mm-hmm. But that works quite well for me.
Yeah.
Our bills have fairly, up until recently, been fairly stable, not too volatile. It's changed a bit recently. Mm-hmm. But generally speaking, that works. Like, what part of that needs fixing?
Yeah, so what's happening is because you're paying for something you've already consumed, you're basically getting a loan every month.
Yeah.
And there's no such thing as a free loan.
Okay.
So what's embedded in the cost of your energy bill is all of the financial inefficiency that is associated with the fact that you're not paying in line with your consumption.
Actually, do you know what they always do as well? They always overcharge. I always have a credit with my energy company. I don't know if that's a British...
It was definitely the same in England. I don't know. I don't think that happens in Australia.
Yeah. So whatever they think you need, Emma's probably the same. Like you have like this extra credit, and it grows every single month. So by the time at the end of the year when your contract's ending, you want to change, I might have like a £300-400 credit with this energy company. I found out one of the reasons they do that actually is because you got a credit. It's like this. It's a signal to you that I should stay with them. I'm earning money. Now, really, what it is they've always just been overcharging you. But that's generally how it works. I've been okay with that.
Yeah.
What are the inefficiencies then?
Yeah. So the first inefficiency. So cash flow is a thing. So if you're consuming something, that means the company that provided to you had to pay the money to bring that to you, but you're not paying them for a few months later. So you have this disconnect, which creates cash flow issues. The other thing, it has to do with the credit exposure side of it. So you individually, you're not a big credit risk, but when you multiply that by everybody that's consuming energy, by big companies that consume energy, now if you're the energy supplier, you're wondering, okay, is Peter going to pay this bill? Or if you're a big manufacturer, are they going to go out of business before they pay their bill? So now you start to sort of stack up, okay, we've got cash issues that we have to manage. To manage those cash issues by actually borrowing money from commercial paper markets, by drawing upon the revolving line of credit. So you start to think about, okay, there's whole departments now that are tasked with managing cash flow. There's departments now managing credit risk.
Right.
And so that's the financial inefficiency that exists.
The cost of the capital
The
means
cost of the capital, absolutely.
which gets passed on to the customer. Do we know what that is about?
Yeah. So what we think is that we can save about 10% on average. So your bill could be 10% cheaper if you adopt, the software that Sunnoda is using, if you pay for energy instantly. Now, the other things that are important is so it's called bad debt, but actually in the US, 5 to 7% of people don't pay their energy bill.
Yeah.
And that just continues to stack up over time, again, because the energy company doesn't know if you're going to be paying that.
I think there's some kind of laws with regards to turning your energy off in the UK as well.
Same thing here.
Yeah.
But there's ways to intervene and help resolve those situations quicker when you actually know. But when you're relying on a non-instantaneous way of paying, it delays that information of when you're actually going to know that.
Right.
So again, it just sort of exacerbates the problem.
Right.
And then the last thing that I'll mention is that it's also the case that when you pay your energy bill, you're just paying one company. But in my experience, I've worked through the whole value chain of energy. So there may actually be 5 or 10 companies that had a hand in bringing that energy to your house, but you're only paying one of them.
Right.
So what do? They have to turn and pay the next one, who then pays the next one and the next one.
You're paying whoever you buy the energy from.
Yes.
The energy, but okay.
But then they turn and pay the other people.
Because they don't want to have they don't want every gas company to lay a set of pipes. They want one shared
That's
set
exactly
of pipes.
right.
Yeah, yeah. Okay, so technology wise, the way it works is essentially like I'm basically streaming sats for my energy usage.
Yeah, so that's possible. Yes.
Okay.
But what we think is actually going to be the case is that it's more important just to give people a choice. So if you want to stream sats, great. If you want to still pay at the end of 30 days, great. But what we can do is we can just get closer to the cost of providing the energy, because again, if you are deciding that you want to wait for 30 days, there is cost associated with that. And so now we can differentiate the consumers.
You can see the two.
Yes.
All right. So it's a bit like when I think the airlines were one of the ones who first revolutionized pricing mechanisms. So it was kind of like, I know if I book weeks in advance, I can probably get a cheaper flight. But if I do fly on the day, or if I want to fly in the morning, it'll be this. If I want to take hang luggage versus, they give you those options. And so if you want to catch a flight these days, if you're if you're a little bit shrewd, you can go, right, I'm going to book in advance. I'm only going to take hand luggage. I'm going to take the morning.
That's right.
You can plan all this shit.
That's exactly right.
And so what you're basically saying is, here are your options. You can pay at the end of the month and it will be £300, or you can pay as you go and it'll be £250.
That's exactly right.
And the energy company benefits because they're getting the instant money.
Yep.
Or you're incurring the cost of capital if you choose to defer it.
That's exactly right.
Okay. Is this one of those things where it will be probably discriminatory against, not by intention, but discriminatory against the poor?
No.
Okay.
No. So, in my Twitter bio,
You sure it's not because we know these things happen. Like, for example, with insurance, poor people tend to have to pay proportionally higher insurance rates because they tend to live in areas of higher crime. And that's, there's a term for it. I can't remember what it is, but.
Yeah. So no. So that is not the case. Actually, it's going to be the opposite way. And why that is because so much about energy costs or price today that we all pay is being socialized. And so when you think about that socialization, what's happening is that there's maybe neighborhoods, maybe zip codes that are more expensive to serve, but everybody's paying the same price. One of the examples, actually, I was just reading the Canary Media on the way over, which is an energy publication, and they were talking about solar panel deployment and how there's a huge gap between wealthy people with solar panels and low-income people with solar panels. Now, part of that can be just sort of ability, cash on hand, able to sort of pay for those things, but it's also the case that again we lack sort of the price signals to say, does it make sense to be sort of filling up wealthy neighborhoods with solar panels versus should they be more distributed based on the actual needs of the grid? And so there was a study in Chicago recently, not recently, 5 years ago, that sort of looked exactly at that issue where the incentives which were available to everybody were only being taken by people in wealthier neighborhoods. And to the extent that it was actually creating a burden on the entire energy grid, well, the burden, which then gets represented in costs to more maintenance, upgrades to the grid, that burden gets spread to everybody. So the lower income people are actually helping to now subsidize more wealthy people having solar panels on their roofs. So there's actually embedded equity issues that are not being resolved, or that can be solved with better market pricing, or better markets. And then you can actually more directly address some of the problems that do exist with energy equity if you do want to have programs like energy assistance programs, which are really widespread in the US. One of the challenges actually with that, so during the pandemic, lots of additional energy assistance was provided, but a significant chunk of that went unused. Well, why? I mean, this is money available to help people pay for their energy bills. Why are people not taking advantage of that? And the reason why is because of fraud. So the government didn't want to give money directly to the utilities because money's fungible and who knows where that's going to go. Okay, so they didn't give it to the utilities. What they do is they say, okay, if you need energy assistance, get your form of identification, your bill, and then 2 things that prove you live there. Go down to the nearest office and then you'll get the assistance. Well, that's a lot of time and effort. So with the system that we're talking about, where it's sort of provable where the money's going, it's going to pay for energy, we can now have a way to efficiently distribute those benefits to the people that need it and be able to say with 100% confidence that benefit's going to pay for energy. So just another example of how you now empower governments, empower energy companies to better serve the people that they serve, not sort of take this top-down view where everybody pays the same, everything gets socialized. Let's actually get very granular with things now that we can when we decentralize. Our whole thing is the energy system itself is becoming more decentralized. Let's now decentralize the method of payment.
And what about, I understand why you're going to use the Lightning Network for this. It makes sense. You can stream sats as you stream energy. But what about the inherent volatility of the Bitcoin price? How do you prevent that becoming an issue? Is this similar to like how Jack talks about the Lightning Network?
Precisely.
Yeah. So you're just using the Lightning Network as a way of moving value fast.
Yep.
But but you're not using it in terms of, it's not the payment currency.
Yeah, so they said
Right.
Don't give you quick answers, but that really is the quick answer.
Well, that'd mean my assumptions. Otherwise, it just wouldn't make sense. Like if you're in the UK, if you had this great technology, there'd probably be like one person in the town I live in beyond me who you could explain to. Nobody else would. Yet you still got a problem. Like you've still been able to solve a problem for everyone.
Yeah, so it really is. It's thinking about
You're using the power of the Lightning Network.
The Lightning Network for us provides sort of an atomic medium of exchange, or sort of instant medium of exchange. So you can operate in your local currency on both ends. The payer and the payee can both deal in fiat, deal in local currency, or deal in Bitcoin. But the point is that really Bitcoin is the vehicle to move value quickly. And so that's really what we're leveraging here. And then on top of that, the Lightning Network is an open network. So that's where we're able to actually write, in that application layer, write software that's creating that direct link. So the whole back office that today sucks time, sucks resources, from the system, we can now eliminate all of that and just focus on when energy moves, money moves. It's that simple.
Right. Okay. So where are you at with this? Are you at the point where you're deploying this, or you're just testing it? Where are you at with this?
Yeah, that's a great question. So where we're at today is we're working with a couple of Bitcoin miners to commercialize the software. So we just raised money, and that's really where we're at. So what we're doing is going to be pushing sort of the limits of the Lightning Network. And so that's why we get really excited. So we're working with Bitcoin miners who understand the opportunity to really initiate this innovation, because this is a huge way to scale the Lightning Network. So let's start with people who know it best. Because of everything you said with Jack, et cetera, the energy companies, they're not looking to have Bitcoin in their balance sheet. So we're able to make sure that they still receive cash, or USD in our case. And really the only case that we're asking them, from a sales point is, are you okay getting paid more frequently? So it's an okay sort of pitch to them. And that's where we're beginning. And what we're going to do is really just kind of scale within the Lightning Network to kind of build out, okay, we're doing $1,000 a day. Now let's do 10,000. Let's do 20. Those are the things that we need to do, and do it at a very high reliability, because Lightning Network reliability is not 99.99 like a Visa or MasterCard. So we're having to sort of put the effort in to make sure we can get there, because we're not paying for podcasts. We're paying for energy. It's a critical thing. It has to be 100% reliable.
Right. Okay.
In what way are you testing the limits of the Lightning Network in terms of like volume of transactions?
Yeah. So it's transaction volume, and it's also just ensuring that the reliability side of it.
Yeah.
So
right.
there's novel infrastructure that we're building on the Lightning Network, and I think that's really kind of the biggest thing that we want to show can scale. So liquidity is of course one of those challenges on the Lightning Network, and making sure that you actually can move the payments. And how do you manage all of the liquidity without, creating a bunch of cost? So it's about sort of doing everything, doing it quickly, and not sort of losing your shirt in the process.
Okay, so if you're using the Lightning Network really as a way of, it's kind of like an accounting system that runs alongside the distribution of energy, and it's just a way of moving value. But does that not mean you have to hold a certain amount of Bitcoin yourselves to be able to move those Satoshis around? And are you taking on board any volatility risk?
Yeah. So
how are you hedging your risk?
Yeah. So the short answer is yes. What we're doing is we're setting things up so that we're not sort of owning that risk ourselves. But I think that that's going to be an important question and challenge with anybody that's doing something like what we're doing on the Lightning Network, is how are we as the enablers of these transactions going to be making sure that we're not now putting ourselves in a position or putting our customers in a position where they're exposed to the price risk. The good thing is the transaction that we're talking about today happens in under 10 seconds. So there's really not currency risk in that. Now, but as we scale and we're maintaining liquidity, it's going to be a question for us of what's the most efficient way to do that while also managing the price exposure.
Oh, yeah, but hold on a second. So if you're going to be taking payments from the miner and you're going to be sending, assume with a cut, some of those payments across to the energy provider, and you're saying, do you mind getting paid instantly? What are they actually getting transferred? Like, you're streaming sats because you can do instant sats, but the energy company at the other end, if they only want dollars, how does that become dollars for them? How are you settling? Are you settling on a daily basis, a weekly basis, a minute by minute basis?
Yeah, so we're integrated with a third party on the off ramp side.
Okay.
So the actual exchange is being done by a third party today.
Right.
Because effectively we're actually not serving as an intermediary in the transaction. It is purely as Lightning should be. It's peer to peer. Our software really exists as just decentralized software that allows both parties to transact between each other. So it's to automate all of the complexity. So we're not actually the ones who are pressing go and then moving the funds over. We're just saying, here's software that has all the logic embedded in it. It will automatically read the meter and then move the money. And then of course, a third party, which is obviously custodial, does that conversion at the very end, just like Jack would say. Yeah. So we're not involved in that. We're just using somebody's existing technology.
Is it not like an accounting nightmare for the energy company, the energy provider? Because instead of getting like one payment every 30 days, they're getting 1,000 throughout the month or whatever it is.
Yeah, so that's a great question. So one of the fun things that we talk about with energy companies is reconciliation. So today reconciliation is actually, it's task in and of itself, because you are getting multiple, you have multiple sources of money coming in, and what ultimately is happening is that there's folks whose job title is in the accounting department, focused on matching up inbound, outbound, ARAP. All of that can get pretty complex. But when you have the Lightning Network and you're settling things instantly, the actual notion of reconciliation goes away.
Right.
Because it was money out, energy out, money in, and it all happens in 10 seconds.
Yeah.
So it's actually kind of fun having these conversations with energy companies, with their controllers, et cetera, saying, hey, it's going to change how you sort of perceive things. So multiple payments is not going to be a task, because A, it's all fully automated. B, you don't actually have to reconcile anymore.